everybody. It is Rob Keynes for Gold, Silver Pros, and I've got a special treat for you today. My staff has put together a best of 2021 video for your enjoyment tonight. Please enjoy your Friday and enjoy your weekend and enjoy this special look back at where we've come in 2021 for Gold, Silver Pros. You know, when we first started this off, I just did it just for fun. It was just a hobby. You know, I was working and I wanted to do something to explore the precious metals. I knew I wanted to get out of writing and try a new format. One of my good friends, Chris Marcus of Arcadia Economics, basically dragged me out of being a writer and an analyst and into the spotlight here on social media, and had to do a lot of convincing. He said, Rob, you got to do this. You have a lot of stuff that you need to tell. Did so much to help me out, believed in me when I didn't know what the hell I was doing, and really helped me out a lot, had me on his channel, you know, introduced me to people, and helped give me a platform. And then we kind of took it from there. And we have grown so much in the last year. I'm so proud of our channel. I'm proud of you, our subscribers, for sticking by us. We had a lot of growing pains, figuring out what we're doing and how we're doing, best way to serve you guys and bring you the information that you need, while also somehow financing all the stuff you need to do this channel. You know, unlike a lot of YouTubers, I have a whole staff. I have a team of 3 people that I've been paying for basically all year. A professional planner that helps me plan out the business and what we're doing. I have a social media person. I have an account manager that handles our business relationships and also comes on the channel every once in a while because she's such a smarty when it comes to political history and political science, as that's what her field was in school when she went to Harvard. So I think I have one of the best teams, and I think that's why you see the quality of stuff that you do here on the Gold Silver Post channel. But really, it's all about you. It's not about us, it's about you. So please enjoy this look back at our journey in 2021. I'm really looking forward to all of the big announcements and the big changes we have coming for 2022. We're going to build on what we did this year, guys, and we're going to blow it out, and we're going to have a lot of fun. Now that I'm doing this full-time as my full-time thing, we're going to expand way beyond what we've done here. You guys stay tuned for that. We're going to bring you so much information, so many new platforms, so much access to things that you haven't seen, so much more research, and so much more value. I think you guys are really going to enjoy it. So stick around for 2022. It's going to be a very special year, much like 2021 was. And with that, we wrap it up. We wrap up the year heading into the new year. Can you believe it, guys? The new year is so amazing. We kick off the new year, January 8th in Denver, Colorado. You're going to see me with a bunch of other influencers and analysts at Load Bar, 4 to 8 p.m. Saturday, January 8th. That sign up link will be down below, and you've seen it on my channel before. We have a limit, so by the time you see this, we may be full or we may have a few spots left, but if we have spots left, go ahead and register, or heck, just register and put your name on the waiting list. We're going to have also a conference on Wednesday, January 26th on Hopin. This will be, I think, our 4th virtual investment conference where we bring special guest speakers and we bring you lots of other content, access to some of the companies you guys like to do business with. We're doing that January 26th. We have a special event that I can't announce yet that we're doing here in Dallas in person in March. I'm not going to give you details just yet to hammer them out. You'll also, I've been invited to speak at Vancouver Resource Investment Conference. My understanding is that is in May. We may go back and do another silver symposium with the team over in Idaho and Washington that does that. So stay tuned for that. We've got a lot planned, guys, but we've got a lot more than that you'll have to stay tuned to the channel to see. It's going to be a surprise. It's going to be a secret, but wait until we unveil what we're doing. Appreciate my staff for doing all the work and getting this video put together and everything they've done this year. Want to wish all of you a very happy New Year's and a profitable and a blessed year for 2022. Safety and happiness for your family and your friends. And with that, here is the year-end review for 2021.
Implement Basel III requirements today, I think that you would have bullion banks in London that would have to withdraw from the London market, and that supposed 1,296 tons of gold float would actually come down to a fraction of that. And that would upset a lot of things. And you then, okay, could people go to the COMEX? Because supposedly there's a lot of gold in COMEX, but it looks as though gold delivery is being pushed off of COMEX into London. So I've got all sorts of concerns about how much gold is actually available in the COMEX vaults, how much gold is actually freely available in the London vaults. And remember, the London vaults aren't audited independently, so we don't know how much gold is actually available that doesn't have a claim, that's not actually allocated, that could be free floating in the market. And we know that I've talked in detail about the issues with the COMEX audits. They're not published, they're not regulated very well by the exchange and by the CFTC and the CME group. So it's very difficult to tell how much gold is actually there, but I don't think there's that much based upon the data. So I think if you're wanting to get physical gold, you do it now.
Here's a really interesting change. The biggest 4 and 8 traders short, biggest 4 traders short are 36.7 of the shorts, and the biggest 8 is 47.5. That's a huge amount of concentrated short positions, mostly by the bullion banks, some by the producers. An absolute tremendous amount of short paper on the COMEX, the US market for silver. And that's basically is what's been keeping the price down. Silver's trading just over $27 today. They beat it all the way down into the 26s after it touched on 30. Remember last week, Monday's open a week ago, it touched on 30.01. They initiated this big paper short. I showed that in my last videos last week. I'm not going to go over it again today, but that brought the price down. But remember, the buying of silver has not stopped. People have continued buying silver to the tune in the last month of about 8% of all of the holdings have inflowed the last month, okay? So basically, the first week of January to the first week of February, 8% of all of the silver storage has been added in that 1 month alone. We're talking like all the silver storage, all aggregated over time in just 3 to 4 weeks after the beginning of the year. That is people saying, we want silver. Now, it could be
what's going on in the silver market. People are pulling silver off of the market. They're pulling it out of the COMEX, they're pulling it out of the Shanghai, they're pulling it out of the ETFs, they're pulling it out of Indian market, they're pulling it out of everywhere and taking physical possession of it. And we looked at the report from SRS Rocco, which showed us a lot of that is for investment demand. It's not all for industrial demand. Investment demand has really kicked up from 2019 to 2020. And everybody from the analysts to people like the Silver Institute, Metals Focus, and all of these organizations are predicting even increased more in 2021 silver demand. Then we turned our attention back to gold. We think the fundamentals of gold are really good. And I showed you a really good potential investment for you guys if you want to get into that gold space. Blue Lagoon, of course, they have a lot of silver there as well. And they have copper in what's a major copper bull market right now, about 7 to 8 year highest price in copper that we've seen on that market. So I think that potentially could be a really good option for you guys for your portfolio if you're interested.
So we're looking here at a 100-year historical chart of macro trends. One of the reasons I wanted to start with a long-term chart is because depending on how you look at silver is your perception of where silver could go from a price perspective. And also the way that you look at a chart can influence how you see it. So I'm going to make that point here by just looking at a regular non-inflation adjusted chart of silver. We can see that as it was, money in the financial system per the U.S. Constitution, we had silver in our money up until the point in which it was released from that obligation. It started rising, and then we reached a high here in about January of 1980 of, we can get to focus on that, 35.75. That's non-inflation adjusted. So then if you look at the next rise in silver during 2011 when it hit, let's get that price there, 48.60, I think it really touched on almost 50, a little bit above that on some other information I looked at. We'll just call it 49. It reached what looks like a much bigger high, but that's not inflation adjusted. So if you take CPI index and you apply that to this chart, it changes quite a bit. So, and that matters because gold and silver are really the measure of inflation, especially gold, but silver to some extent as well. That's why they were money, because when you have them in a system which is non-fiat, they retain more and more and more value over time. They slowly appreciate in value. When you have a fiat system, the fiat dollars are printed more, those prices for those metals should go up, and we should expect a pretty high price rise. So if we're looking at this, you're saying, well, it's peaked a couple of times, but somewhere in this range is probably the real price of silver.
The question is, where is that metal going? Who did they lend it to? We're talking about a lot of metal, over $6 billion worth of metal. Who has the capacity to take on $6 billion worth of metal? Is it one of these exchanges, the COMEX, London? Is it a big bullion bank, some huge gigantic player in the market, or a series of huge gigantic players? We don't know. But apparently Perth Mint's been supplying a lot of metal. Is it to industry? Is it to people to use, gold for jewelry and silver for all these applications? I mean, it could be. It could be going to producers who are actually using the metal for certain purposes.
but is in such a big amount, it would have to be really big group of producers. I'm completely speculating here, but based upon the amounts that I saw in those financial records, I would speculate some of this probably went to the exchanges to bail out the COMEX and the LBMA the last couple of years. And probably some of it went to some wealthy individuals, maybe for certain purposes. And probably some of it went to industrial purposes, whether it be jewelry or in silver, solar panels in China, or medical implements, or maybe even coining of government coins or bars and rounds, investment demand, who knows? But it's not sitting at the Perth Mint, and they don't have enough cash to cover it if people have a runt on the Perth Mint. So again, given the numbers that we have, we believe the Perth Mint is technically illiquid at this time, and they're in danger of becoming insolvent if that trend that we've seen 18 to 20, 2018 to 2020, according to their financials, continues down the same path. Now in about a month or so, a little over a month, we should get the Perth Mint's financials for 2021. And we're gonna see if that trend continues or if somebody's bailing them out or if they're getting the metal back. Maybe, luck of the Irish, in a month and a half from now, we see them getting the metal back, but that's not what we saw the trend the last 3 years.
But we think in coordination, Russia is now beginning to play their gold hand too.
Yeah, I think you may be right. 𝙂𝙊𝙇 price came out in an article on a Mexican site, basically stating that the Russians and the Chinese, according to his intelligence, had threatened to back their currencies with gold and come out in the open on it. And that's what's kind of forced the hand of the Basel regulations and why now the London market may be coming under pressure in order to get their house in order. So very interesting news that you have there and a confirmation from an independent resource that a lot of people respect as well. Andrew, I wanted to move the conversation over to the physical shortages because you mentioned that there a second ago, and we've had, again, some more footprints, as you say, with regards to the physical. There's three of them I want to give here. Former U.S. Mint Director 𝙂𝙊𝙇𝙖 said on 𝙂𝙀𝙍 and on April 29th, he believes that the world's major mints are basically out of gold. We recently did an expose on the Perth Mint, along with the CFA, 𝙈𝙄𝙀𝙊𝙇, who practices in the UK, on 7 years of financial statements for the Perth Mint, and they're net short to the tune of about 900 million Australian, and they've borrowed 6.5 billion additional precious metals to meet their demand. Then you have the LBMA, which in March of 21 had this 3,300 ton error in the physical silver market, or a misstatement, which they had to mark down their March inventories. So are these all signs that we have a brewing shortage of physical gold and silver at the current demand?
I'm going to take a look at the deliveries report for silver. This is the COMEX month-to-date delivery notices dated through yesterday's date, July 1st. And you can see the first few delivery days in silver, we had a really nice big pop. So we had people standing for 3,181 contracts of 5,000 ounce silver June 29th, which was the first notice day of July. And then following that up with 721 and then 58 yesterday. So very healthy deliveries when you consider the open interest. If you go to the CME group chart, you look at the open interest, you only had 4,108 open contracts for the month of July. July is not the big trading month. The big trading month is September. Remember, it's a futures market, so the next big trading month is usually a month to 2 months away. People rotate their positions out over time. They roll them to the next big trading month. So to have this many deliveries in a time in which you don't have that much open interest on what's considered a thin delivery month is pretty astounding. It means that people are wanting their silver. So silver demand at the industrial level, the 5,000 ounce silver level, 5,000 ounce bars on the COMEX is encouraging that there is sufficient industrial demand for silver. So the industrial demand is there, okay? I want to talk a little bit about the recent volume, and then I'm going to talk about this date, and I'm going to show you why this date's important as it relates to Basel III. So going to look at settlements tab over here, and you see that as of yesterday, the majority of the settlements were at the price point of $26.10. We're up now to about 26.53-ish on this video. So we have pierced above 26 recently and stayed above, which is a nice encouraging sign. Not that 26 is all that important of a level, but it's nice to see the recovery in price after what happened on June 17th. We'll get to that in a minute. It's interesting to note, if you go back to Wednesday, we were trading at 26.19. So a little bit of the drift in the price heading through Thursday from Tuesday and Wednesday. Of course, we're at 25.90. But as of yesterday, nice bullish sentiment in the silver and the derivatives market in the COMEX. So it appears as though that is matching up with the actual demand.
Yeah, you may be the little boy that cried wolf, but when in high school I was called the burning bush. So I'm right there with you. It's the guy that doom and gloom before it happened. But the funny thing is, they always came true, right? I was just way ahead of the curve because for whatever reason, curse or gift, I can see far into the future by looking at world events and looking at data and things like that. And I think we're to sum what you said, we're at our Weimar moment, we're at our Great Depression moment, where the asset markets are leading the economy and people think it's the economy when it shouldn't be. And they're not the base. The economy is the base of everything.
Right.
We know the problems in the economy. We know the unemployment. You mentioned the student loans. You said about a third or so on the balance sheet of the government. Well, guess what? Students unemployed 50% when they get out of college in their chosen field. That's not a great asset if 50% of those potentially are non-performing loans, and it's the biggest asset on our books. So when you have any sort of debt as an asset on your books, that's a problem.
Of course. And as an auditor who has audited very large companies, if anyone has the credence to say that and the reputation for that to be accepted, it's you.
Yeah, and I think, Andy, some other signposts that we're saying are non-monetary signposts. You, Chris Marcus, and I talked about on his program about a week ago. All the other stuff that's going on in the world, leaving Afghanistan, why did that happen at this precise time? The geopolitical realignment that's going on. The view of the U.S. government towards reversing a lot of their foreign policy. It just seems as though there are other things going on that indicate that the U.S. is in a stage at which it can't manage itself. It's like the old Roman Empire. It can't manage, the empire that it has. And it's, there are cracks appearing in the dam. And so I think these are additional warning signs you look for. We all know the monetary signs, the dollar printing since 1913, the fact that they always raise the debt ceiling, the fact that the world is going to negative interest rates. We now have 180 billion of negative interest rate corporate debt in America, which is insane to me. I don't know why anybody would buy it, but there are other signs outside of the economic system. So I think now it's people are waking up, but they're not necessarily connecting the dots. They're not connecting the dot of Afghanistan to the falling of the U.S. empire that happened in Rome and Greece and Assyria and all those places. As people start to wake up, how do we marshal them into the economic conversation to help people, get where they need to go to protect their families?
One of the things I study the charts and I study, the derivative trade and study that. And what I see is this in both gold and silver, the position's moving towards zero. And I'm not talking about longs and shorts offsetting each other. I mean, longs are going more short, shorts are going more long. So it seems to me that the overall open interest is decreasing. Does that mean anything to you in terms of the silver price? Do you talked about consolidation. Is that what it looks like in a consolidation phase? People sort of jockeying for that center position?
It could be, yeah. I think the message that I had was it's coiling. Okay. Because again, we've seen this before, and the sentiment is so low.
It is.
That could it go lower? Sure. But what's the big picture? What's the 2, 3, 4 year picture look like? Mm-hmm. And I think we have a situation where it's coiling. I really do. And I think that interest will come back that you're tracking. That's great. I think that'll come back, once silver starts to move. And that's when the real fireworks will start. Because like I said in my talk, silver prices, boring, boom, right? Mm-hmm. It's like an EKG printout, right? Mm-hmm. I think the boom is coming. We're in the boring phase now, but the next boom, the next spike is coming.
So gold typically leads silver in a sustainable market. What do you see for gold?
That's how we can compare now back to the Great Depression, or back to the tech crisis, or back to any event dating to 1871, which was on that original chart that we looked at. Translated, what does that mean? We got one more market melt up left coming, and then it all comes crashing down. Boom, bam, slam, crash. All those those things you see in the old Batman comics, or the old Batman TV show, the 60s TV show, where it's like bam, crash. That's what's going to happen in the stock market. So what goes up when markets go down? Gold and then silver. Gold pops and then silver goes parabolic. Silver goes up as a higher percentage than gold does when the stock market crashes, but gold also goes up. Okay, so that's what we're talking about here. Let's talk a little bit about that. I've talked so much on the channel about we're getting close, and people asking me when, and I said I can't give you exact dates. And even Nostradamus can't pick exact dates. And in the study of longer term events over time, you never pick exact dates. They don't matter. You pick milestones. You look at milestones. Where are you? Where are you going?
back when we had the big financial crash in 2008, 2009, I ended up losing my consulting job with EY. I wrote the book, the first thing I ever wrote, 𝙎𝙀𝙊𝙎. It's because I saw some of the inside of the industry, because I was doing a consulting engagement in mortgage services, and I saw the subprime crisis up front. I saw the data on 50,000 loans on a company that went out of business long before Lehman ever had trouble. And we were trying to save that thing for Morgan Stanley, who bought this loan portfolio, and get Morgan Stanley in the black and also get the loan service correctly I ran that whole engagement. I had 50 people working for me on there, and I was managing that for Ernst & Young and for Morgan Stanley. And we got it on track. We got that loan portfolio on track. So I actually had real world experience in mortgage servicing on one of the largest subprime portfolios, 50,000 loans, one of the top ones, during the middle of the crisis.
Do you have an example of something that's critical right now that's needed that there might not be enough of on those ships?
Well, silver.
Okay.
I think rare earths, critical minerals that we need to build our economy with, certain metals.
I wouldn't even, honestly, I wouldn't have even thought about those being on those containers.
Tin and ore, because while the United States produces a lot of our own gas,
yeah,
we lack critical rare earth minerals that get shipped over to support our military and our technology.
You're right.
So we can get gold and silver, we can get oil and gas, some of these other things we can't. Tin, lead, copper, zinc, all these things have to be shipped around the world. And you're seeing this massive increase in prices in copper, lead, zinc, the basic building blocks of our economy, and that's affecting producer prices, which is going to affect inflation. And 80 cargo ships is not enough to supply our economy. And I mean, it's going to be helpful.
Yeah, I'm not even wanting to make light of this. I'm literally thinking of PlayStations and Xboxes on
right.
there because they're in shortage. I'm not even joking. I didn't even think about that being on those ships.
Yeah.
That's absolutely crazy.
Yeah, all of that stuff comes over one way or another via shipping, because the United States, if you look at the Western Hemisphere, a lot of it doesn't, a lot of supplies come from South America, but not everything. A lot of it comes from China. A lot of it's produced in China. A lot of it's produced in European Union. Our biggest trading partners are China and the European Union, Germany. So it gets shipped over.
So this is a great segue. Let's jump into the European Union. Yeah. We're seeing an absolute energy crisis right now.
Yes.
I put out a video a little while ago about starting to not allow your fuel tank to go under half full because you never know. And now we're seeing those massive lines. Nat gas is up right now 12% today alone in Europe. So I'm of the belief that we're going to see a crisis in Europe, and then that will the contagion will run to us pretty quickly. Now, I'm not saying it's going to happen soon, but I think we're so close.
Yeah.
Can you add something to that? I mean, when people start spending a lot of money on natural gas, fuel, and things like that, they have less money to spend into the real economy.
Crowds out your discretionary income.
Yeah.
And there's issues with energy there, energy inflation, and this is something I wrote about 7 or 8 years ago on Seeking Alpha. The first one to break is probably going to be the European Union. Yes. They were the first to negative interest rates, so they're the first to debase their currency even more. They have issues between the northern and southern countries.
Yes.
And policies. Look at what happened to Greece and the bailouts and the bail-ins. So their politicians are more apt to screw the average Joe to continue their social programs and spending and to bail out countries like Greece than what you see in the U.S. So I think Europe will probably blow up first. I think you're correct.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.